Now let's have a look at how we can measure the efficiency of a business using the accounts receivable turnover ratio. So the accounts receivable turnover ratio is a measure of how efficient the business is in collecting their accounts receivable. So it's telling us how long it takes the business to collect and convert its accounts receivable to cash. There are two different ways that we can express this ratio. The first way is in terms of times per year. And to calculate it, we're saying it's sales divided by accounts receivable. This is the formula that you're given in the HSC and the one that should be your default measure. However, they can also ask you to express it in terms of days. So to convert the times per year to the number of days, all we have to do is divide 365 by the number of times we collected per year, or the sales divided by accounts receivable. When we're calculating this ratio, we're going to need information from both the balance sheet and the income statement. The accounts receivable figure is going to come from the balance sheet, and the sales figure is going to come from the income statement. So, if you're only given one financial statement, make sure you check the question or the additional information to find that second figure. So let's have a look at how we can actually calculate these figures. Let's first have a look at the number of times per year. So in this case, we're given a balance sheet for the business. Step 1, we need to identify the sales figures and the accounts receivable figures. Because it's a balance sheet, we can get the accounts receivable from the current assets, whereas we have to look for the additional information to get the sales figure. Step 2, we just use the formula that we're given in the exam to calculate the number of times per year. So it's sales divided by accounts receivable. In this case, the $30,000 in sales divided by the $3,000 in accounts receivable, giving us 10 times per year. Alternatively, we can be asked to calculate it in terms of the number of days. Step 1 is the same, but we need to identify the sales and accounts receivable figures. Step 2, we're going to use the formula in terms of days, not just times per year. So that means we need to have 365 divided by sales divided by accounts receivable, or the number of times we collected per year. So this is just simply 365 over our 30,000 in sales, which is divided by our 3,000 in accounts receivable, giving us 36.5 days. However, we don't talk about days in terms of decimal points or percentages of days, so we must always round up to the whole day, giving us 37 days. Another way they could present the information that we need to be able to calculate the accounts receivable turnover figure is in a table of just the figures that we need. So, step 1 is again the same. We need to identify the sales and accounts receivable figures. Step 2, we use the formula to calculate the ratio. Now, since they haven't specified if they want times per year or days, it's always best in a calculation short answer question to give both. So, to calculate the number of times per year, we know it's just sales over accounts receivable. That's in this case 1,600,000 divided by 200,000, giving us a collection of 8 times per year. Or we can express that in terms of the number of days. That's 365 divided by the times collected per year, which is going to give us 45.63 days. So again, we have to round up to the nearest whole day of 46 days. So in summary, the accounts receivable turnover ratio shows us how long it takes the business to collect and convert its accounts receivable to cash. It can be expressed in either times per year or the number of days it takes to collect. The formula you're given in the HSC is the times per year, so that should be your default position, although for safety's sake, in a short answer, you should always express it both ways. Remember though, when you are expressing it in days, we always round up to the next whole day, no matter what the decimal point is, whether it be 0.1, 0.8, we take it up to the next whole day because it's taking more than that previous day to collect.